Hey guys, welcome back to Financial Markets. Hope you're all doing well. So naturally, the market continues to be quite turbulent. We have now VIX trading at 38, so it's still clearly elevated from its usual levels, which we normally range between 12 to, upwards, up to even 20. And naturally, this is pretty much, unseen in the last decade that volatility levels this high. Last time we saw levels like this is pretty much in '08. So naturally, there's still a lot of turbulence within the markets. That being said, there are stocks. We've had a rebound. Firstly, in the S&P, we're up now. I think 20% in terms of year-to-date levels. So if we see in terms of January in 2020, I mean we are getting back there. I mean still a little bit of a move. So if we see January 2020. Yeah, so we're down about 10%, but we've recovered a lot of money back, or a lot of recovery done, about 30% nearly. So a lot of people are going back and then analyzing this with the 2008 levels, and they're looking at periods like these and saying, oh look, it bounced but it then corrected. And sure, I understand why they do that, because they're trying to validate a technical thesis. That being said, the environments are different, right? In 2008, you had the Fed and you had these global central banks, give packages in like October of 2008, around here. So you had them around these levels here, and now you've got them a lot more earlier. If you say you got them here, then it would be a fair comparison to say, okay, I got them here. The market still collapsed, but that's not entirely true. So that is something people need to think about, which people are missing, because there's one thing understanding the macro environment. And there's another thing, understanding liquidity. And markets are not always driven by fundamentals. When there's obviously a big squeeze in liquidity and a big flow of money coming in, naturally it will elevate prices up, but whether or not the fundamentals make sense or not. But that being said, there are companies like Amazon, which is what we're going to talk about today, that have just hit all-time highs recently. So the last time they were all-time high was February at 21.67, and now at 23.75, and it is roughly an appreciation of about 10% nearly from its previous peak. So naturally, it's something to think about when a lot of people are having that question. They're saying, well, the markets are collapsing. Okay, they're having some recovery, but we don't expect some single stocks to be at all-time highs again. But then we have companies like Amazon at all-time high, and why is that? Well, it's not that difficult to understand why. And the reason why is because Amazon actually is benefiting from this everyone working from home environment. So I don't know about how you guys are going about your days, but since I started working from home, I've been on Amazon a lot more, ordering equipment firstly to set up my work from home base. I've ordered more monitors, I've ordered more keyboards, more mouses, because there are other individuals within the household which are having to work as well, and so we need more desks and more capacity to do the work. And naturally, being a Prime customer, you get an opportunity to get things the next day, which is what people want. And so you got people, even then using the opportunity to price products slightly higher. So Amazon is benefiting a lot from these activities, and naturally, the more people are from home, even if they're not doing. If they're not thinking about ordering equipment or whatever it may be, they're still spending a lot of time in the internet and browsing. Whether they're doing work or not, they're still on Amazon and browsing or shopping or whatever. Now, obviously, the clothing companies and stuff, yes, they have a limitation of how much user traction they're getting, because they're specifying one asset, which is clothing, whereas Amazon caters for everything. People want to read more books. People are saying, okay, I'm going to spend a lot of time in my garden, so I want to get some garden and leisure stuff. So you have a mix of those things, and that's why Amazon is still profiting from this sort of business. And so that's why Amazon has, it collapsed, I think it was like 20%. Yeah. And then since then, it's rallied, since we had rallied, about 50%. So a lot of people, if they did get around these levels, they have good opportunities now to maybe take some off the table. And I would definitely recommend that, because even though the company is sound and great, but naturally if a recession does happen, and in the macro environment it does seem very likely, Well, in terms of the actual economy, it will be. In terms of stock market recession, I mean, it's debatable. But regardless, there's been an influx of liquidity right now. So once this settles down, you will get Amazon normalizing at certain levels. And now that could be at a level like, say here, um, around these levels, even. Or you can have it at potentially these levels. Or it could go all the way back down. But either way, you'll get more clarity in your head as to what's happening with the market. And so I think that's what's most important right now, for people to sit tight. If you were in Amazon, great, you can have an opportunity to now get out. If you weren't, sit tight, you don't have to chase it up. This is what I'm doing because I missed this opportunity. I felt that even though Amazon will benefit, I thought the market liquidity would still drive the stock down a little bit more, and it didn't. And that's fine. I'm happy to sit tight on it and allow once the liquidity to sort of fade out, and then we'll get some normalization somewhere when asset prices start to correct and so get a bit more clarity within the grand scope of things. So you could allow yourself another couple of weeks to just sit tight, hold your cash, preserve cash, keep looking for these opportunities, and think, okay, so let things normalize, let the liquidity pump come in, people are selling their shorts, let them get out, let things get back to a bit more clarity, and then we can make a decision about whether we want to buy or hold off on a while. But I thought I'd give you my 2 cents. I think it's very important because now everyone's been asking me about Amazon is getting drived upwards and shall we start jumping on the train. You don't want to be the last one to get in when it corrects and you're sitting there with a 5-10% paper loss, unrealized loss, sorry. Even though it'll probably recover, but naturally, especially if you're a trader, you do want to time your entries a lot better than you would say if you were a really long-term investor. And naturally, I'm a trader by nature, so that's the way I'm going about things. So I think that would be quite useful for you guys. Let me know what you think and what stock you want me to review next. Happy to take any suggestions. Please subscribe, like, and comment, and see you guys in the next one. Bye.